Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Let's get a couple of trading ideas going then for the last half hour. Ashwani, coming to you first. What are you working with?
Well, last time I forgot to mention the closing today will be horrific. And the reason is HDFC Bank. Because everybody who expected 5% higher is now going to cut positions. So I wouldn't be surprised if you do 500, 550 on the bank nifty. So in a special situation, even the last half an hour is a sell on banking. And this is going to start a trend on financials, which is likely to continue even tomorrow and day after. Now, having said that, individual stocks, Canfin Home is a sell with a stop of 362, target of 345. India Bulls Housing is a sell with a stop of 1200, target of 1150. And Raymond is a sell with a stop of 960, target of 925.
Okay, a lot of sell calls coming in. Mitesh, what about you?
Yeah, I have two more to add there. I have a sell on Karnataka Bank with a stop 120 for targets of 110 and SPPT on Bata with a very tight stop just above 758. Look for declines about 735.
All right. Well, gentlemen, thanks a lot for that. Let's do one thing. Let's shift gears for a bit. More than 5 years after Bajaj Auto unveiled its quadricycle, Qute, the automaker can expect the vehicle to now ply on the Indian roads soon, with the government clearing the policy permitting the quadricycle for Indian commercial use. To discuss this and more, Rakesh Sharma of Bajaj Auto joins us now on the phone line. Mr. Sharma, good morning. The government has cleared this policy to permit quadricycles for commercial use in India. I just wanted to start by asking you what kind of potential this would bring about for Bajaj Auto, and have all the safety and emission tests been cleared?
Hi, good afternoon. Yeah, foremost, we are actually quite delighted that the Ministry of Road and Transport has cleared it, and the approval is going to be uploaded in a couple of days now. We've actually looked at it from an inside-out approach. We've really not sort of done a very detailed analysis of the volumes which we can expect. We find that both in domestic and international, there are such multiple segments that this vehicle can attack, that we would rather actually put it out in these commercial segments and see the response, and then probably in 6 months' time or so be in a position to plan out or let's say to anticipate what kind of volumes we might achieve in due course with it.
Okay.
And the second part of your question, indeed, all the safety and emission norms have been cleared. The vehicle meets all the specs as put out by the Indian standards. It is also meeting Euro 4 standards, and it has been cleared in something like 26 countries internationally for commercial and in some cases personal application.
So currently, Mr. Sharma, if you could just give us a sense of your installed capacity for this vehicle. Have you already started exporting it to some markets?
Yeah, the capacity for this vehicle is sort of flexed along with our three-wheeler capacities. As you know, we are quite a large manufacturer for three-wheelers, both for domestic and international consumption. But given that flex, I mean, if I make certain kind of assumption, we can easily do 5,000 units per month of Qute straight on. But, you know, if the demand sort of outstrips this number, there is a provision to flex it between three-wheeler and Qute. So it's a little bit of a sliding capacity.
So 5,000 per month is domestic plus export?
Yeah, is the capacity.
Okay, the total capacity.
Minus,
all right.
depending on how we play the three-wheeler requirement.
Sure. Just one final question then before we let you go. Do you see any competition at all in this space? I mean, M&M, showcased its prototype at the Auto Expo, but anything else, any major competition you see?
There's nothing out there in India right now, and even internationally in the kind of ballpark in which we have positioned it in terms of commercial proposition. We don't see anything physically out there right now, but I'm aware as we create a market for this, there are plans underway, and sooner or later there will be vehicles which will appear on the horizon.
Okay. All right, Mr. Sharma, thanks very much for joining in and telling us more about the Qute that Bajaj Auto will soon be bringing to the market. Well, it's Monday, which means it's time for Midcap Mania. We've got Nigel joining in. Nigel, Midcap's a pretty turbulent place to be in these days, but you've been looking at an interesting company once again, I believe.
That's right. You know, midcaps haven't really been the place to be, and be very, very careful when you're looking at any of these midcaps. As always, we cover these stocks, we explain it to you, really. Stock price movement is not in our hands. I'm talking about a smaller company. It's known as Aventil. It's only around 150 crore market capitalization. Remember, at the peak, in fact, this company had moved even, to a 300 crore market cap board. So it's come off a considerable bit from the top. What does the company do? Really, they're into manufacturing, developing, as well as, designing various components. And some of those components are up for you on the screen. The radio frequency equipment. They're also into the real-time train information system itself. So these are some of the components that they do. Remember, the company is headed by Dr. Vidyasagar, and he's an IITian. But, he likes to keep it below the radar, and we were trying to reach out to him as well to get further clarity on a whole host of issues. But that didn't really happen. We went to their website. We're looking at some of those BSE exchange notices, and this is interesting. They have been granted a patent in May 2018. Now, what can this throw up in terms of numbers? That's not really with us. It's basically they're going to be tracking the train movements, the control the office automation, as well as passenger information. So it can throw up a big opportunity, but as of now, we don't have a number. Now, in fact, they also provide services for coastal surveillance as well as security. So who do they provide these services to? Well, some of the key clients should come up for you on the screen. The Indian Railways. They're tracking the movement of trains, where exactly it is. And in fact, it's more or less automated. The Indian Navy as well as Army, they as well come in as part of their client list. And even Boeing, because Boeing, in fact, some of those system satellites will be provided to the aircraft. And those aircrafts will be provided to our forces by Boeing. So just keep that in mind. Now, financials, as of now, it's still a growing business because a lot of money goes into R&D. If you take a look at the revenues, nothing really to go by. But in fact, in the last year, at least they went up to around that 50 crore odd mark. And the operating leverage does play out. As the revenues move up, the margins improve. Profitability, well, that's the adjusted profitability of around 2 crores in the last year. They had a one-off big other income of around 15 crores odd. But quickly, if you just move on, then you see that research and development as a percentage of the total turnover, well, that in fact is coming down because now the revenues are going up. So that amount really is coming on a higher base. And that's rather important. As the revenues grow, that number should keep dipping. No debt in the books at all. They have around 15 crores because they sold some part of their land. So 150 crores in terms of market cap, and they have 15 crores in terms of cash. That should be a bit of a positive. They've also been paying out dividend. So it's clear that they're at least making some money. And if they make money, then they're returning back to the shareholders. What I didn't like, though, was in fact the promoters just in the last, few years has been gradually reducing stake. Now, that's something that you don't like. We'll have to understand why exactly the promoter is doing this. Whatever is the reason, that's not a positive. Otherwise, the company is quite interesting. Big opportunities going ahead. But obviously, when you're spending so much money on research and development, you're waiting for orders to come through. There's a lot of uncertainty in the business. Like, in fact, if there is a delay in government procedures to finalize orders, when do these patents result into, into revenues? That's important. And in fact, the time frame also is unpredictable. So it can lead to lumpy revenues. And then how do you exactly evaluate this? A small 150 crore market cap company with cash in its books, it could throw up a big opportunity. When is the big question? It's halved actually from the recent high. Back to you.
Okay, thanks a lot for that. That, of course, as you know, is just proprietary research. It is not a recommendation either way. Well, we still have about 15 more minutes left before the market comes to a close. Our guests are still with us. Deepak, the other space that has done well in this falling market is consumption. So, even today, names like Pidilite, Nestle, Page Industries are all hitting new highs, Berger Paints, Britannia, etc. What's the pick of the pack?
I think, two of the stocks you mentioned, the Britannia has done really, really well. I think even Dabur has been doing really well on the board. So these are not, fundamentally great valuation because you're paying 70 times, 60 times earnings. And, if you look at, so for instance, Britannia's expansion plans, the idea that, from 70,000 crore to become a 400,000 crore company will probably need it to go beyond what it is currently, which is, a product expansion. But I think right now they're focusing a little bit on geographical expansion and a bit of, operational profitability metrics. But if they were, I mean, if you look at it from a momentum and a consumer brand point of view, that's looking the strongest of that pack. There is much of the FMCG space is, quite richly valued. So I would take any recommendations with a pinch of salt here, because I don't think I can fundamentally justify most of the valuations. However, they're all looking very good. Page, for instance, has done really well on results. And I think if it continues in that way, it has product expansion as well for it. So, there is a potential growth over there. However, I would still suggest, don't buy it one shot, give it another 6 months. There's going to be pain in the markets. You might as well spread your buying over that time before you, don't inject a large amount of money just because, something's doing well relative to the others. I think a lot more pain is going to come, so spread your buying.
So we're counting down to what has been quite a tough day for the bulls. In fact, the Sensex is still down more than 200 odd points. But the Sohn Conference 2018 kicked off in Mumbai today with some of the biggest names of the Lal Street in attendance. We in fact heard from some of them as well. Nimesh Shah caught up with a few of those names. He's now here with us to give us all the key takeaways. Nimesh, we've been hearing your views and the interactions that you've had. But tell us, what has been the most important thing you heard? Any interesting tidbits from the conference so far?
Well, Sonia, to me, the biggest takeaway of this conference this year was the fact that many of the investors did mention about, the auditors as a big risk in their presentation. So, on a lighter note though, but yes, that was a big concern for many of the investors who spoke at the Sohn conference. So, that was to me a big takeaway. As far as, as far as the investor mood or the sentiment is concerned, I met a lot of investors as well who didn't speak to the media, but they were at the conference, and the general mood seems to be a bit of caution. Clearly, the way mid-cap and small-cap have underperformed since the beginning of the year, that's a bit of a pain point for many investors, and many of them do run their own PMSs. So clearly, that was very visible that they are seeing this pain in the mid-cap and small-cap, and that's where the bigger challenges is. And probably this is a year when the pain in the mid-cap and small-cap will actually divide the men from the boys, and the true clear leaders will emerge in the mid-cap and small-cap. So that was a key takeaway. So as far as the sentiment or the mood towards mid-cap and small-cap is concerned, clearly from an earnings point of view, yes, you will see further downgrades. But I guess there at least the hope seems to be on the positive side, and many believe that the sheer pace of downgrades are going to go down, and probably you'll see a bit of revival in the earnings as well. So that's on the positive side, but clearly from the negative side, I guess the mid-cap pain is what something which everybody alluded to and said that maybe this year is going to be very challenging for money managers to make money in the mid-cap and small-cap.
Okay. Yeah, it's been a tough year, hasn't it, Nimesh? A lot can change. I guess that's the market. Thanks very much for getting us all the highlights and the action from the Sohn conference. Well, earlier Nimesh did catch up with lots of market experts. He did speak with Prashant Khemka of White Oak Capital Management. This was, of course, on the sidelines of the Sohn conference. Spoke to him about what else, about this mid-cap correction that's playing out and what he would like to buy at these levels.
Individually stock specific, you've seen a lot of correction, but on the whole mid-cap index, if you see BSE mid-cap or so, is down double digits, about 12 to 15%. So I think it's a greater distinction being made between better mid-caps and not so good mid-caps. So last year there was a tidal wave that lifted the entire mid-cap and small-cap spectrum, and now there's greater distillation and distinction being made, and those that did not weren't worthy of being where they were last year, huge rallies of 50, 100, 200%, they are coming back to their natural levels. Okay. But on the other hand, you've had many mid-caps which have done very well, and hence you have an index level which is down only double digits, despite many of the mid-caps being down 40, 50%. Because there are others that are positive. So I think this year there's a greater discretion, greater analysis being applied to which stocks merit to be where they should be.
Is that going to be a concern in the mid-cap and small-cap for money managers like you, that you have to be now more worried about the auditor's profile and the auditor's comments as well?
See, I would say auditors is more of a reflection of reality. Some of the auditors either qualifying the statements or resigning, that's more of a reflection of reality that existed for a long time, but maybe right now there is a greater appreciation and greater realization of those risks given what the market is. But merely an auditor's statement or auditor's resignation doesn't change the reality per se. So if one has done the work properly on the financials and on the reality in the first place, then even if the auditor were to resign on some kind of genuine reason, should not affect the stock prices.
One big thing to watch out is the free cash flow. Is that one of the biggest parameters while you invest into mid caps and small caps?
And not only mid caps and small caps, Nimesh, but also large caps. Ultimately, our fundamental belief is value of any business, project or company, listed or unlisted, is value of present value of future cash flows. And that's the fundamental first principle that we believe in. Any thumb rule or metric that we otherwise use has to be grounded in that fundamental context. So not just now, but our focus always has been on free cash flows, on returns on incremental capital. Those are first and foremost what we focus on. And obviously those would be there if corporate governance is strong. And once those cash flows are there, whether they are shared in fair and proportionate manner with minority shareholders is very crucial. So governance plays a very critical role in all our assessment.
Which are the pockets you think which will give good opportunities?
Sectors where government ownership is dominant. There we not an avoid, but we've struggled to find. We continue to look for opportunities. But in energy sector, we are not finding any opportunities at this time. In utilities, not finding. Telecoms and PSU, obviously government-owned banks, have not found any decent opportunity in a long time. And so those remain, areas where we don't find. And hence, the other areas that we are finding very attractively valued opportunities. Again, I'm not saying sector generally, but there are mispriced opportunities in each sector. So in consumer discretionary or staples, also in private financials, we do continue to find opportunities, as well as, materials, particularly chemicals pack, which is basically, pharmaceuticals and chemicals. They both export engineering skill sets and hence are not too different from IT in that regard. So there we continue to find, alongside IT, some very attractive. So domestic opportunities in consumer, financials, whereas in exports, materials, particularly in chemicals, as well as in IT. And pharma as well, we continue to find very attractive opportunities. Pharma, not necessarily the US, the generic company space, but more in the contract manufacturing and research.
Okay, that's the word coming in from the SOAN conference. We're just counting down to close. By the way, some important statements coming in from Governor Urjit Patel in the Financial Times, where he talks about how emerging markets are facing a dollar double whammy and that the Fed needs to, at this point, prolong the balance sheet shrinkage in order to help emerging markets like India. So we will, of course, we are flashing a lot of those important statements for you. It has a lot to do, as we've been telling you, with the trimming of the balance sheet, even as the US government has raised its deficit. But for now, Governor Patel says that emerging markets face a big problem as far as the dollar double whammy is concerned. All right, we'll get Lata to give us more on this. But for now, Mayuresh Joshi of Angel Broking also joins in. Mayuresh, would you be concerned about, the way the banks, the NBFCs are moving on the back of, higher cost, higher rates? There is an RBI rate hike that's expected as well.
Afternoon, Sonia. No, obviously, I think the RBI meet is going to be extremely critical. And in that sense, again, if there is any justification for a rate hike, considering what we've probably seen in terms of inflationary trends, you're probably going to see the cost of funds move up marginally. Though, again, I think for a lot of NBFCs, their varied mix of borrowing has probably shielded them so far. But I think average cost of yield moving up, specifically in terms of bank borrowings, I think that does push your overall spreads down. So to that bit, how much of the pass-through is actually commendable in terms of what can actually be given to the end users and how much of that has a detrimental impact in terms of the overall lending or the advances growth. I think that is to be seen, but I think well-diversified corporates.
Mayuresh, I'm really, really sorry to butt in. We're just at close, and the reason is because of the flashes on your screens. Now, this is interesting. This is a piece that the RBI governor has written in the Financial Times, and from what I gathered, Lata is here with more details. Lata, the RBI governor is actually making a pitch, a plea to the Fed to start reducing or start sort of changing the timelines of its own balance sheet reduction.
Absolutely, you summed it up beautifully. What is unusual, first of all, Governor Patel doesn't write very often. He's writing about the dollars moving away from emerging markets. Basically, he's saying Fed is going to trim its balance sheet. That will take away $1 trillion by December 2019. At the same time, unexpectedly, US fiscal deficit is rising, and it will be 1.16 trillion this year and 1.17 trillion this year. Together, he's making an observation that in the last 6 weeks, every week, $5 billion is leaving emerging markets. So he's just making a plea to the Fed that you all waited very beautifully for unemployment in the US to fall and then inflation to adjust. It was a well-telegraphed move. Now you need to take into account that there is a new factor in terms of US deficit, which you had not factored in earlier when you drew up the timetable of your balance sheet shrinkage. Now there is a new factor, so please shrink your balance sheet a little slowly to make allowance for this. Otherwise, there will be unnecessary turmoil in EMs and by rebound in the US as well. But markets are ending. I just wanted to put this on the table before the market ended.
Okay, Lata, thanks a lot for that. We'll come back to you for more. But for now, let's just quickly wrap up the markets. We just have a minute to go. It's not been a good day at all. There are, of course, a lot of pressure points coming in, as we were telling you, the RBI policy this week, etc. All of that has caused the banks to be under pressure today. So the Bank Nifty goes home with almost a 1.5% cut. HDFC Bank leads it with a 3% fall. You have SBI that's down 1.5%, and a lot of the NBFCs, Indiabulls Housing Finance and Bajaj Finserv, are your biggest losers, down about 1 to 4%. Apart from that, you have other heavyweights from the consumption space, HUL, Titan, etc., that are down about 1 to 2%. Pharma was under pressure today too, so Sun Pharma lost about 1.5%. But the other list of heavyweights like ICICI Bank, HDFC, L&T, IndusInd Bank, ITC, all under pressure. So what gained and what bucked the trend? Let's take a quick look. Infosys was up in the green, up about 2%. M&M was up about 1.5%. That's been bucking the trend lately. Reliance was holding up in the green as well. And a couple of these metal names like Tata Steel were not too bad. But it was really the mid-caps where there was a bigger damage.
Oh, yeah, absolutely. And that's been the consistent story, Sonia, hasn't it, last so many days? And today was no different, really. If I do talk about some of the major movers and shakers, you've got Leel Electricals down another 18%, PC Jeweler 17%. Quality locked-in circuit. A lot of these ASM, additional surveillance measure stocks, they have been down on 5% circuit from the word go. Your Rain Commodities, HEG, Graphite. So these stocks were under pressure today. Delta Corp has lost 7%. So all kinds of stocks have borne the brunt of the selling pressure. KC International down about 5-6% as well. So it's a wide sell-off. There's no denying that. TVS Motors, a stock like TVS Motors also down 5%, clubbed with a lot of others. Escorts has lost 4.5% as well. Equitas is down 4%. So even some of the larger mid-caps, even they have seen plenty of pressure. I don't have too many winners to really speak of for obvious reasons. Stocks that move higher, I mean, Vakrangi, Atlanta, do you really want to count these on the upside? Lemon Tree found some buyers today, 4.5% up. Man Infra was an idea given by one of the speakers at the Zone conference, so for about 3% up on that stock. L&T Finance Holdings, interesting in a market that was reeling under pressure, fearing the rate hike and other issues, fiscal slippage, etc., higher bond yields. That's one NBFC stock that held its own. Some buying on Hexaware and FirstSource, so mid-cap IT and the trust there still seems to be intact. And last but not the least, Jubilant Foodworks. Decent day for this one, 2.5% up as well. Mayuresh, apologies. I mean, we've just had a lot of news flow to deal with, but please do complete the point you were making. And my key simple question to you is, do you have any mid-cap ideas? Right now, people are very scared, very worried about what they're holding and whether they should be buying fresh. What would you say?
No, so Surabhi, I think to cut the point short, yes, I think the cost of borrowing specifically in relation to bank borrowings will obviously inch up, which means that the pass-through has to be in a calibrated manner because it should not impact the overall advances growth for a lot of these NBFC companies, whether they are housing finance companies, rural-focused lending companies, the CV financiers, and so on and so forth. So I think the well-run corporates on this count, where again I think the advances growth has been stupendous, where the asset quality pressures are actually coming off. I think those are the stocks that one can actually look at within the larger universe. The caveat obviously is that if the bank RBI does hike rates, yes, it does create a knee-jerk reaction on these stocks. But yes, I think the stock that you mentioned, L&T Finance, again, I think commendable show in the quarter gone by. Asset quality pressures have come down, ROEs are expanding, and so is Cholamandalam Finance. Though I think a price-to-book parameter, it is still very, very expensive. So I think that premium valuation might just justify. Generally for the mid-cap universe, yes, I think the kind of fright that we've probably seen in terms of stock market corrections, I think the ideal way of approaching these stocks is with a bottom-up approach in a staggered way and very minuscule buying. So on that count, I think two stocks that we probably like in a staggered way on declines. One obviously is Neel Kamal. The numbers have been quite stupendous in the quarter gone by. In the plastic furniture segment, it has a 39% market share. What you've probably seen in terms of volume growth of 9% in the quarter gone by should sustain. They're also getting into monoblock products, value-added products like plastic storage, as well as non-monoblock products, and that should probably help it in attaining a reasonable amount of revenue growth. Even in the material handling segment, I think it's doing pretty well. On the mattresses segment, I think it's a huge segment out there with a 3,000 odd crore market size. It's just contributed 48 odd crores. The management is of the belief that 200-300 crores can easily get added from this segment itself. So I think margins should hold up. Their format stores, they've cut down loss-making stores. You're probably looking at value additions happening in this front as well. And that should itself drive 11% top-line growth, 14% bottom-line growth. Top line coming around 2,650 odd crores, bottom line 160 odd crores, and the ROE expansion. The other stock that you like is Cavisite Infra Projects. Strong order book of 5,600 crore, residential is 85 odd %. In comparison with stacked comparison with peers, much better placed in terms of margin profile compared to Ahluwalia Contractors, JMC, Simplex, and valuations probably are cheaper. So again, these two stocks on the bottom-up approach is something.
All right, so two stock ideas there as well on the fundamentals from Ayuresh. Thanks very much for joining in. We'll also thank Ashwani and Mitesh for being with us this afternoon. Well, tough end to what has been a tough couple of days for this market, no denying that. But let's get back to the story that we were just discussing with Lata. That's the RBI governor actually in a rare event writing in the Financial Times asking the Fed to calibrate the pace at which it will start shrinking its own balance sheet. So Lata, if I was understanding you earlier, so what the governor's argument is that the US deficit is going up, they'll print more bonds, but the Fed is not going to buy as many bonds. So it'll be other investors rushing into this asset. Is that right?
Yeah, somebody else will have to buy them because, you know, what typically you mean by shrinkage of balance sheet is they were reinvesting the interest. Now they won't. So they'll just take the interest back. So if they don't reinvest, then that many bonds, that much money is not getting printed, and therefore that much dollars will not be available in the market. Likewise, at the same time, there is a demand for dollars from the US government by selling bonds, and therefore dollars from everywhere else will get attracted to this market and will result in a loss of, I mean, the first target usually is EM markets. Dollars get drawn from there, as the governor argues. 5 billion has flowed out in every one of the last 6 weeks. And he says this double whammy is not going to be good for the world as a whole. I think for the Indian markets, I'm sure it is just pure coincidence it is coming, you know, 2 days. It was published yesterday, by the way. It's not in today's FT's edition. It's over the weekend. And I don't know whether he intended it to be like that at all. He must have sent it and, you know, it's just gotten printed incidentally at this point. But the market will realize that the governor will have a very keen eye on what's happening in the external sector while making the policy. These things are not elucidated in the minutes. The minutes normally speak of only domestic issues. The RBI never comments on the rupee factors or levels or anything. They only say that we don't like volatility. Beyond that, they never comment. But that he is so worried about the dollar pullout is something that is on the table now.
So essentially he's telling the Fed, or requesting the Fed rather, please don't engineer a taper tantrum. We were trying to avoid it in 2013 and don't do much that can perhaps trigger it again.
This is very much like, you know, Raghuram Rajan also raised his voice against the Fed and said that you must be aware of the harm you are causing by this taper tantrum on emerging markets. So very much in the same lines, a very responsible central banker speaking for a lot of emerging market central banks is making this pitch to the Fed, and the Fed hears them out very clearly. There are forums in which they listen to the Asian economy, emerging market central bankers. So it's a very important comment. I mean, we know currencies, Turkey, Argentina, and even Indonesia raising rates twice in the last few weeks. So he's really speaking up for that entire gamut. For us, the importance is, yes, the external sector will be important when the RBI makes its policy.
Fourth quarter earnings have not been up to the market's expectations. This morning, some brokerages, in fact, have cut estimates for the current financial year, that's FY19. Nimesh caught up with Ramdeo Agrawal of Motilal Oswal Financial Services on the sidelines of the Sohn India conference. Here's a slice from that conversation.
I think earnings came, there were quite few bright spots. Automotive was very good. Your oil companies came out with good results. Private sector banks came out with good results. All the NBFCs, they gave good results. So I think there were enough bright spots. Of course, the disappointment was coming from public sector banks, which probably could be a last stream of operation, and they could be in for a moderately to very good 18-19, the current year. That could be significant. That's the guidance you are getting. Some of the metal companies have delivered wonderful results. So all in all, I think it's not a great quarter, but it gives a sense. I mean, it gives a sense that 18-19 should be a much better year.
What did you make of the recent correction in the mid-cap and small-cap? Many stocks are down 40-50%. Is this like a mean reversion, or do you think now there is good opportunity to buy into mid-cap and small-cap?
So whenever market does excesses, whether it is a mid-cap, large-cap, small-cap, it has to correct. I mean, the correction can be outright reduction in the price, or for 5-10 years you don't make money. At this point of time, I mean, in last 5-6 years, ever before, now you need to know your stories very well. Are you able to stand by your ideas? Are you clear about the quality of business and quality of management? Don't look at the valuation. If you are confident about top quality business and top quality management, I think you are going to do very well. Particularly stocks have corrected. So if you are also waiting for the market to tell that if market falls, I'll also run, then I mean that's not the way to invest.
Sure. Sir, one reason some of the mid-caps have corrected off late is the concerns or the resignations of the big four auditors. In fact, one of the speakers at the conference did say that the one bit of red flag is if there is a big four as an auditor. Correct. Big four as
so
auditor.
I think
your take.
Yeah, so I think in recent time what is happening, maybe it is coming from global aversion, or maybe after the PW's kind of judgment by SEBI to ban, banning from saying, but almost it is looking like a new source of risk, that is big four auditing you, and at some point of time you might have, I mean, there is uncertainty coming, what they will say. At the same time, also it is an accreditation that if they clear it, you have a kind of a much better quality audit. But I think it is clearly looking for the smaller companies to handle a big four is becoming very tough. I mean, you don't know where auditors will resign. Right now there is outright resignation before signing, which itself seems to be a very crazy idea to me.
Exactly.
I mean, whether it is Institute, whether it is SEBI, whether it is Department of Company Affairs, I think if the shareholders have appointed somebody for the year, I think the auditor is duty bound, should be duty bound to give the audit report with whatever qualifications. You can't run away. Right at the end, you can't run away.
As a large investor in one of the companies where a lot of large investors have stuck, I have one letter from a large holder of 1% writing to MCA as well as to us, saying that there has to be a proactiveness at the government level or the auditors level to at least tell the investors what went wrong. Are you also of the camp that believes that auditors has to explain to the shareholders as well?
Yeah, that's what I'm saying. I mean, he is in knowledge of what is the problem. I mean, I cannot go and get into the book, however, I mean, whether I own 5%, 7%, 10%. I mean, neither I have competence, nor the capability, nor the right to walk into the company and figure out what is the problem. And that is the very reason we have appointed like a police or our watchdog, the auditor. And when the auditor says that I cannot, I mean, I would like to resign and I would not like to give the reasons for which he wants to resign, I find it very strange.
India's national football team captain Sunil Chhetri will make his 100th international appearance as the Blues take on Kenya tonight at Mumbai in the Intercontinental Cup Series. India made a blistering start to the tournament, beating Chinese Taipei 5-0, where the captain Sunil Chhetri scored a hat-trick. But with a dismal turnaround in the stands from Indian fans, Sunil Chhetri put out a heartfelt message on Twitter, urging fans to show their solidarity and support. Stars from India's favourite sport, including Virat Kohli as well as Sachin Tendulkar, have all come on social media to show their support for the Indian football team. Okay, so that's something that perhaps football fans in the country should take note of.
Okay, let's start commodities now, and let's start with the sugar prices, because that has an impact, of course, on the stocks as well, where we have seen all of them actually declining quite sharply today. Government has been taking some measures, but we have yet to see some direct impact or immediate impact really of that on the sugar. Output this year is estimated at around 31 million tons or more than that. This is as compared much higher to nearly 20.3 million tons in the previous year, and the consumption is estimated at around 25 million tons, and that leaves you with lots of sugar if you also take into account the carryover stock from the previous year as well. So as I said, while the government of course is making a lot of steps, there is an expectation that you will see a 3 million tons of a buffer stock being created. Government also already has made it mandatory to export 2 million tons, out of which only 1 lakh ton has been exported. So the numbers are not so great. Government is trying to do a lot, but the industry is asking for plenty, even at these levels. And the cane arrears in the meanwhile stand at a whopping 22,000 crores, which is expected to only grow. In the meanwhile, you also have ISMA writing a letter to ministry that if this condition or situation continues, the mills overall India may not be able to go into a crushing season, especially with the banks also not extending too much of a support. This industry clearly needs a lot of support from the ministry right now. But that's not all. If you look at the agri-commodity prices, almost everything is trading on the weaker side. Sowing has begun. The monsoon is looking quite normal. So you have the edible oil prices, spices, wheat. You talk about it, touch it. Almost everything in the agro-commodity space has been trading in the negative at around multi-week lows. Talk about that and more. For that, we're joined by Sumit Bagaria, Associate Director at Choice Broking. Sumit, hi, good to have you. What is your sense to begin with, first of all, in sugar and many of these agro-commodities perhaps, because clearly it hasn't started as a very strong month yet again for this sector?
Hi Manisha, good afternoon. Well, yes, most of the agri-commodities are looking weak. In fact, today they have given a correction. And it seems that from here on there is a possibility that we might see some more correction in next couple of days. Oilseeds like soya oil, RM seed, they have given correction. There is a possibility that from here on we can see a correction of around 3 to 4%. I think it's better to be on short side for next couple of days. Sugar is also looking weak. There is a possibility that we might see a fall of around 4 to 5% from present levels. I think most of the agri commodities can give correction in next couple of days. So if there is any pullback or bounce back from present levels, then that should be used as a selling opportunity. At present, the best commodity to trade in is soybean, soya refined and RM seed. I think we can see a correction of around 15 rupees from soya refined. It's quoting at around 752 levels, and from here on there is a possibility that we might see a fall till 740 or 730 levels.
All right, clearly not good news. I mean, good news for consumers definitely, but not for the producers there. Sumit, also, how are you looking at the metal space? Because it clearly is a day that belongs to nickel and copper. Further gains is, are you counting on that?
Yes, the metals are looking good to me. Aluminium, nickel, copper, commodities are looking good to me. I think from present levels, copper can give a upside move, and on high side we can see levels of around 467, 468 levels. I think for a trading perspective, one can initiate long positions in the copper June contract at the current market price. If there is a dip of around 1 to 2 points from present levels, then that should be used as a buying opportunity. And on high side, we can see levels of around 467, 468 levels. Aluminium is also looking good to me. We have given a buy call in aluminium with a stop loss to be placed at 153 levels on lower side for the upside target of 162 levels.
What would you want to do now in the crude oil prices, Sumit? Because that is a volatile market, yes. We have seen 8% decline in last 2 weeks. Today started yet again on the weaker side. Do you see much more pressure from these levels?
Oh yes, absolutely. Some more correction can be seen in the crude oil prices. NYMEX crude is quoting at around $65.50. From present levels, there is a possibility that we might see a fall of around $2 to $3. That means on downside, we can see levels of around $63 or $62. As far as MCX levels are concerned, from the levels of 4400, 4420 levels, there is a possibility that we might see a fall of around 100 to 150 points. That means on downside, we can see 4300 or 4250 levels. So for a trading perspective, it's better to be on short side for next 2 to 3 days time horizon. One can initiate sell positions in the crude June contract at the current market price. If there is a bounce or pullback of around 20 to 30 points from present levels, then that should be used as a selling opportunity with a stop loss to be placed at 44.80 on high side for the downside target of 4,300 levels.
Well, 0.5% down on NYMEX and 1% down in Brent as well is what we are looking at in case of crude oil prices. Thank you so much, Sumit, for coming by and giving us strategies on all of that agro and non-agro commodity space. But with that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.